We were expecting fireworks, and the ECB bought the kitchen sink with them. They're literally tidying up the kitchen right now. You're seeing more lower interest rates. You're seeing more QE, more downbeat news from the European central banks, and they really are tidying the kitchen. But here's the thing. This isn't the European Central Bank's kitchen to tidy up, because we're seeing central banks all across the world cutting interest rates due to external forces. And by external forces is US and China trade tensions and the problems that the Eurozone economy is facing when it comes to issues like Brexit and the threat of US tariffs coming into Europe over the coming months. So yes, European markets are looking at this positively. You're seeing the euro slide straight down below 110 against the US dollar, lowest level for the euro since May 2017, but we do expect the euro to remain under solid momentum to as levels as close to 106 over the coming weeks and months. But the European Central Bank are cutting interest rates. They are tidying up the kitchen. But for as long as the Eurozone economy remains threatened by forces that are outside of Europe, and we're talking about US-China trade tensions and other external risks, there isn't that much that this European stimulus is really going to do to economic growth, because you've seen 30 central banks cut interest rates now in 2019. It hasn't helped matters. The European Central Bank is just one more central bank to join this train.
And a bit of relief too among investors after Donald Trump tweeted that he was giving that tiny bit of reprieve in the US-China trade war. How are investors thinking about that situation now?
It's symbolic, Oscar. It's looked upon positively because the US-China trade tensions have been such a critical issue for investors now for over 1 year. But it's like clearing out a football team. You've got a lot of players leaving Manchester United. You've got a lot of selling going on in that football club. But there's still issues between the team. There's still issues on both sides in US and China. So until this is really a breakthrough and that we turn the corner completely from US-China tensions that have been going on now since June 2018, there is not going to be a change. All we're seeing is a 2-week reprieve, but global economic sentiment is already hurting from this. You've seen the IMF cut global growth forecast no less than 3 times over the past year. You're expecting the weakest level of global growth since the years around 2010. So until there is a breakthrough, until you really see meaningful progress, not a 2-week reprieve, the issue still remains in hand.
Okay, Jameel Ahmad in London, thank you for your analysis as always.